This is a presentation of the first model or trading model I intend to use once I get back to trading, and this after my studies. And yeah, I think it is something that would be good to be a part of the trading models I'll use. So this is the CRT model combined with dealing ranges and also one candle change instead of delivery. It's a combination of the three models or the three ideas into one, but how we execute will depend with the how price is behaving at this time. So in the form of CRT, we have this candle 1, candle 2, and candle 3. This is the trading candles. This is the candle that gives us an idea of price, giving us a reversal at this point. So this is the CRT high and then the CRT low. The CRT low becomes a TP1, and also you can consider taking more TPs such as this candle that has a very tiny wick as TP2 or TP2 like that. So with that in mind, we check first if this candle is within an area of value or tapping into an area of value, and we can say it is within an area of value, which is this daily time frame fair value gap at this point. So with that in mind, we introduce the idea of dealing ranges. This candle 2 gives us a dealing range like this, and my thinking is that if this candle is going to give us sales, then it needs to tap into the premium zone or premium side of this dealing range and then drop lower, and it gives me the idea of the price. This candle price will open, give us a high that dips into this premium zone and then drop to give us a low, giving us sell entries. So what we are doing is looking for these entries in the lower time frame. So as we look for them, we are asking ourselves if price is to come into the zone, the premium zone of this dealing range, what is it coming? Why is it coming here? So we want to look for a reason why price would want to come into this zone, and this is now where we look for things like fair value gaps in the lower time frames, or even breaker blocks or order blocks, things like that, so that it gives us the idea of price going lower. So in this instance, we have this fair value gap, and no, it's not the one. Let's go back to the daily time frame and mark where our price is beginning to give us sell entries. So we use this arrow to mark this candle. Then I can go into the lower time frame to mark where yes, price is likely to give us something. So in this premium zone, we have this 4-hour fair value gap. You can just mark it as well. And now you can see price tapped into this 4-hour fair value gap after the new 4-hour candle has opened. This now 4-hour fair value gap. Now this one loses its purpose, it has served its purpose, it can go. And then this is a CRT high. And yeah, so with that in mind, we are now looking for if price is coming into here, you can see it has already rejected lower. So can we get a refined entry into this as price is going into this for our fair value gap, and then we get a reason to get into a trade to go lower and give us those targets that we have marked. So in the lower time frame, again, we are seeing another fair value gap, which is this one in the 1-hour time frame. Can change that to 1H time frame. Sorry. Yeah, so 1-hour time frame, and you can see now price has given us a reaction of that, but you want price to give us a reaction with an engulfing pattern. That is what we are trying to look for. If price is giving us an engulfing pattern of that area, then that is our confirmation to get into a trade. So in the 30 minutes time frame, we again look, do we have an engulfing pattern out of it? we do have an engulfing pattern, and this engulfing pattern is what gives us the idea that price now may keep going lower. This engulfing pattern is a solid reaction, or giving us another idea that price is respecting this fair value gap and it is going to keep going lower. Now with that engulfing pattern, we introduce the idea of another dealing range. Typically what we do in the higher time frame, we also emulate it or copy it into the lower time frame. So that dealing range, or that this what do you call it, this engulfing pattern to go lower, that gives us this change in state of delivery right here, this change in state of delivery, and that is why we mark it like that. And then we want price to come to the 50% or the premium zone of this dealing range, and then that is now where we set our trade for sales. And then when you do that, we set our stop loss just above this fair value gap, this 1 hour fair value gap. And then our targets are the ones we marked before. This is the first target, which is TP1. This was CRT low, also giving us this first take profit, and also the second take profit can be. Also, the reason why this is a first take profit is because of this relative equal loss, and then the second take profit can be here because of this. In the daily time frame, we have a weekless candle, so you mark that as a second take profit as well, and we expect price to get to it and tap onto it before it goes higher or do whatever it wants to do. So that is the idea of CRT, or power of 3, with dealing ranges and change in state of delivery. So another way to look at it is, let me just go back to the daily time frame and see if there is another way to look at it. Is let me delete this now. Is we want price to come into this dealing range, the premium zone of this dealing range, and lower time frame, and give us a market structure shift. So this is in the daily time frame. We can look at it in the 15-minute time frame or the 5-minute time frame and get that market structure shift immediately after price has gotten to this level. So you can see this market structure shift happens at this point right here, and after that a market structure shift has happened. Price is previously from this premium zone, and we now expect price to keep going lower. And with that, we'll have this now, this as a breaker block, where price comes back into it and then closes below with an engulfing pattern. Again, repetition of the same process. Like this, price comes to the 50% of this dealing range, you take an entry there, and stop loss just above this high or above this breaker block. And now again, we are targeting the same targets as before, this TP1 and also TP2 below, or take profit number 2 at this level, right? And you can see that is how price behaved again.